Good day, ladies and gentlemen. I'm Marcel Roos, a fund analyst in the PSG Wealth Multi-Management team. Thank you for joining me today. I'll be discussing the PSG Best Ideas portfolios. Just a quick introduction. What are the PSG Best Ideas portfolios? The PSG Best Ideas portfolios are portfolios that we created for direct PSG clients on the PSG Wealth platform. We created 6 different models that cover a wide range of risk-return objectives that vary in terms of their cash, bonds, equity, local, and offshore asset class exposure. We constructed the portfolios using diverse mandates from PSG Asset Management's award-winning fund range. All funds are blended using a Markowitz portfolio optimization model based on the underlying funds' historical returns, volatility as measured by standard deviation, and risk-adjusted returns. A quick background on us, PSG Multi-Management. We currently manage over 50 billion in our fund of fund solutions. This makes us the largest retail multi-manager in the country. What has allowed us to experience such phenomenal growth and success? We have a robust and proven investment philosophy that focus on 3 core principles. Firstly, to deliver consistent peer group beating returns for our clients. Secondly, to deliver these returns at a below average risk by implementing split funding, or in layman's terms, blending different funds together to achieve optimal risk-adjusted return solutions. And lastly, we use our scale to negotiate competitive fees with our underlying managers and pass this saving on to our clients. The funds that we use to construct the PSG Best Ideas portfolios are all from the award-winning PSG Asset Management Fund Management House. They have a wide fund range that covers the majority of the asset classes, making them ideal for a portfolio optimization model. Let's have a closer look at PSG Asset Management, their philosophy, and their fund range. PSG Asset Management has 34 billion assets under management. They are true value managers, so their thinking is long-term oriented. They have a proven process that has resulted in them consistently being one of South Africa's top fund managers year after year. For the first quarter of 2017, PSG Asset Management was rated the top South African unit trust manager according to the Plex Grant survey. Their funds have also won numerous Raging Bull awards. Their value investing approach determines whether a company is trading at an attractive price that offers a margin of safety for the investors, so this results in excellent long-term risk-adjusted returns that have gained industry recognition. Lastly, PSG Asset Management are obsessed with research. They have a strong team that have combined investment experience of over 150 years. This ensures that all investment decisions are made with due care, diligence, and have a reasonable basis. Their equity philosophy is value-driven, as I mentioned earlier, so they look for high-quality companies by analyzing their moat and management and only allocate when they are not overvalued, in other words, trading at an attractive price or below its intrinsic value, therefore offering a good margin of safety. For those of you that aren't sure what moats are, moats in the traditional sense are the deep and wide ditches that surrounded castles and provided defense against attacks. In this scenario, it refers to a company's competitive advantage that is not likely to disappear in the medium or even long term. This advantage can be their unique product, their established distribution network, or their pricing advantage. This slide illustrates PSG Asset Management's suite of funds. This ranges from money market and income funds, multi-asset and flexible funds like their popular balanced fund and flexible fund, and pure equity funds. They also have 2 offshore funds. This provides investors with exposure across the risk-return spectrum, both locally and offshore. Their stable, balanced, equity and flexible funds were all ranked with the highest 5 Plex Grant status at the end of 2016. The PSG Balance Fund has also won the coveted Raging Bull certificate as the fund which delivered the best risk-adjusted returns over the past 5 years in the South African multi-asset high equity sector. We will now take a closer look at the PSG Best Ideas portfolios, the portfolio range that we offer, their asset allocation, and a backtest of the performance. We offer the following 6 PSG Best Ideas portfolios. We have the flexible income, the low equity, the managed, the aggressive, the global managed, and the global aggressive portfolio. Firstly, the investment objective of the flexible income is to achieve capital preservation by investing in fixed income and money market instruments. The portfolio is aimed at conservative investors that require income and capital preservation. The second fund there is the low equity portfolio. Its investment objective is to achieve capital growth by investing in multiple asset classes in the South African and international markets. The portfolio aims to outperform the CISA SA multi-asset low equity sector average, which is your typical cautious and stable funds. The minimum recommended investment horizon for this fund is about 3 years. The investment objective of the managed portfolio is to achieve capital growth by investing in multiple asset classes in the South African and international markets, but with a slightly more aggressive exposure to growth assets than the low equity fund. The portfolio is therefore for clients with a moderate risk profile. The portfolio aims to outperform the CISA SA multi-asset high equity sector, which is your typical balance fund. The minimum recommended investment horizon for this fund is 5 years. The aggressive portfolio's investment objective is to achieve capital growth by investing largely in growth assets in the South African and international markets. The portfolio is for clients with moderate to aggressive risk profiles. The minimum recommended investment horizon for this fund is about 5 years. Moving on to our offshore funds, the investment objective of the PSG Best Ideas Global Managed Portfolio is to achieve capital growth by investing purely in a variety of international asset classes. This portfolio is for clients with a moderate to aggressive risk profile due to the flexible mandate and the exchange rate risk inherent in the portfolio. The minimum recommended investment horizon for this fund is 5 years. Lastly, the Global Aggressives investment objective is to achieve capital growth by investing fully in international equities and cash. The portfolio is for clients with an aggressive risk profile due to its high exposure to equities and the exchange rate risk inherent in the portfolio. The minimum recommended investment horizon for this fund is 5 years. This portfolio range is comprehensive and should allow clients with various return and risk objectives to achieve their investment goals. Looking at the asset allocation of the funds, the flexible income has about 96.4% exposure, so the majority of the exposure is to South African non-equities, therefore bonds and cash. This contributes to the defensive nature of this fund. The low equity portfolio has a maximum equity exposure of 40%, with the other 60% also invested in bonds and cash. The managed portfolio can have up to 75% invested in equities, but this is usually closer to 65%. This is our most aggressive Reg 28 compliant portfolio. The aggressive portfolio has high equity exposure, which will usually be around 80% or more. On our offshore side, the global managed is almost fully invested offshore, with about 70% invested in offshore equities, while the global aggressive portfolio is slightly more aggressive than the global managed, with a higher allocation to offshore equities. This should provide additional growth over the long term. We backtested the portfolio's performance to 2013, so this gave us returns for approximately 4 years ago. The more aggressive portfolios, as you can see, achieve the best returns over the long term, as they have high exposure to growth assets such as equities, but are also a lot more volatile over the short term. Whereas the PSG flexible income and low equity funds provide investors with a more defensive solution that protect the downside and reduce volatility over the short term. This is evident from their more linear returns compared to the more aggressive portfolios. In conclusion, we've covered the basics of the PSG Best Ideas Portfolios process, the PSG asset management funds that we use as building blocks, as well as a quick overview of the fund range that we offer. Just a quick recap on everything. These portfolios are a direct client offering, so in other words, for clients that do not make use of a financial advisor but prefer to invest directly in unit trusts. The portfolios are exclusively available on the PSG Wealth platform. They cover a wide range of return and risk objectives, allowing investors to achieve their investment goals, be it short-term capital preservation or long-term capital growth. The portfolio optimization leverage off of PSG Multi-Management's proven and robust methodologies. We use PSG Asset Management Funds, which is a multi-award winning fund manager that is consistently rated amongst the best in the country. So that's all for today. Should you have any further questions, please feel free to send us an email at wealth@psg.co.za or call us on 086 0 774 774. Thank you for your time and have a good day further.